levels for Monday, June 1st. Days are rolling along. I hope everybody had a great long weekend. Only one day, but it was a long weekend. And I don't know if it was great, depending on the weather, but hey, let's hope it was. Anyway, let's give you our levels for this morning. Our pivot this morning is 42.25, 42.25. Resistance at 33, 42, 50, 55. Resistance on the downside, support on the downside at 18, 10.03, and 41.97. Pivot 25, resistance at 33, 42, 50, 55. Support below at 18, 10.03, and 41.97. All right, market here continues to chug along to the upside, but as you can tell, it's definitely volatility negated or less volatility as the market continues to uptick here. Keep that in mind as the market opens up, pushes up here a little bit. We got 33 as the next level of resistance. But yeah, so it is very, very thin, light volume, but then again, that's what happens when the market tends to uptick here. So keep that in mind if you're trading, and be a little bit patient. But again, we're rallying, so those markets are very tough for us to trade. I don't know if it's going to keep rallying or not. All I know is that we have to understand what the dynamics of the markets are and trade accordingly, because there's always different kinds of opportunities depending on what the market is, how it trades, and how much volatility we get. Bond market here, again, because they switched over to SEP, right around the 150. Well, June is a 157. So even though we're at 155 and 156, it's that same number that the bond market is holding at that very steady level. And since everybody's concerned about inflation and what it's going to do to interest rates, kind of keep a little bit of an eye open there on the bond market in case something happens. But we'll know about it here. We can trade off of that, obviously. So welcome to some of the new folks that are here. We are trading mini S&Ps. We are trying to find those opportunities where we can scalp the market, because we don't believe markets go straight up or straight down. And consequently, we're looking for those inflection points to give us an opportunity to scalp for about 2 to 3 points, depending on volatility. And we would like, preferably, about, 4 or 5 opportunities during the course of the morning, as we focus more on the morning hours here. We sometimes get those opportunities and sometimes we don't. Again, everything is dependent on volatility more than anything else. So that's what we do here on an everyday basis. Any levels that we give out that we use to trade, or any price action opportunities that occur once the market paints on bars that gives us more setups, is a taught experience. We show you how to figure those out, what to look for, what to expect, how to trade some of these slower markets, so that we can try to be a little bit profitable here at the end of the day, at the end of the week, and definitely at the end of the month. So that's what our objectives are here on an everyday basis. And anything that I go over or teach, or everything that I talk about is taught. We talk about everything, we teach everything, so I don't make stuff up, is what I'm trying to say. It's not in my DNA to make stuff up, but hey, some people believe that. Hey, what can I say? Anyway, it is what it is. Let's, like I said, each day is different, so we never know what's going to happen from one day to the other. All we can do is be prepared for the opportunities when they present themselves. And once they do, you have to just be ready. That's all we can do, right, as traders. If anybody has any questions, if you put your questions in the chat box area, I will be able to see them quicker and answer them faster for you. And any comments that you might have in the chat box area as well. This is where I have my window up and I'm able to see it quicker, answer you faster. All those good things. So anything you need to ask, put it in the chat box areas. The market kind of got up to 30 there and came off here a little bit, slowly drifting back down. We have a little maybe support around our pivot area there. If you're a little aggressive. We have we have 845 PMI manufacturing index. So in about 11 minutes, we have 10 minutes now. We have a number to be released. And then at 9 o'clock at the top of the hour, ISM manufacturing index and construction spending are going to be released. And then there's going to be a Fed speak at 1 o'clock. So those are the outside influences that could affect the market. Maybe, maybe not. But they will, but we have to be a little bit careful here in about less than 10 minutes. And then at the top of the hour, we don't usually like to have any positions on when the numbers are released. We like to be flat and let the market kind of do its thing if it wants to or doesn't want to. I don't know. All right. So that's where we're at. And let's see what happens here when these numbers are released, and maybe we'll get some business. I don't know. All we know is we just trade what the market gives us and then go from there as the market slowly drifts back down here to our pivot, kind of nonchalant. No big deal. And that's the kind of trade that it's at here today. So let's be a little bit patient and wait for the opportunities and then go from there. Support level on the downside we have is 18. And again, we are in a very, very slow, tight little market. Nothing much is going on. So your expectations have to be drawn down just a little bit. That's because that's what the market is giving us, not much. So support at 18, and we'll see what happens from there. But we do have a number in about 8 minutes. So that is a, like I said, we don't like to trade when numbers are released. So that doesn't change for sure. And if anybody has any questions, please feel free to ask. Again, we're using 2 to 3 point stops with the same amount of profit targets. That's only chopping around here a little bit, as you can see. Support at the 18 area. That's our support level. And let's just be a little bit patient and wait. But then we do have a number that's going to be released here momentarily. So keep that in mind for trading. As you know, it's doing its usual morning, going nowhere fast type of trade. Again, if anybody has any questions, please feel free to ask. The support level is down at the 18 area. And this number could be a little bit of a market mover, so we don't like to trade when these numbers are released. There's always opportunity to trade after the market releases those numbers. If we can repeat the levels in the chat box area for us. There are the levels that we're going to use, like I said, as a guide for the day. We add to them, subtract from them. We can delete some. We can adjust some. Everything we do here is based on, what the market price action is dictating, and volatility, obviously. And sometimes there is more volatility than other times, and sometimes not. But 2 to 3 points, at least at this level, at this moment, is a good target. And like I said, we have a number coming out here in about 5 minutes. So if you're trading and we're coming down here to the 18 area, be mindful of that. Very important to be patient in this business, especially when the markets get slow like this. The tendency is to overtrade or just to trade because you are bored. But the most important thing is to be patient and wait for the market to give you the opportunity to dip your toe. And we try not to overtrade because we definitely don't like giving money to the brokerage houses, that's for sure. Again, there's a number going to be out here in about 4 minutes. So if you're concerned about trading when a number is released, kind of wait. We'll see what opportunity is given to us after the number is released. Sometimes there's a little bit extra volatility when the market, when a release of a number that the market looks at and, doesn't usually, I don't know. All I can say is that every time I've had a position on when a number's out, don't work out too well for me. So we'll just be patient and wait for the number to be released. Now, the closer we get to the number, and we missed our 18 here by, I don't know, about a point or so. I gotta be a little bit careful. And being patient and waiting for the opportunities is very important. And if anybody has any questions, put them in the chat box area. I can see that those questions right away. And again, welcome to some new folks that are stepped in. We are trading mini S&Ps futures. Yes, we are futures traders. And they've closed the pits, unfortunately. So we are going to be doing it from our homes. In my case, my basement. But it's okay. We made it through this pandemic somewhat, and now we're trying to make it through and adjust to this market conditions now. So let's hope that everything is okay. So anyway, that's what we're doing here on an everyday basis. And patience is important. So we try to be more patient about waiting for the opportunities to present themselves and not over trading. And we do have a number that's going to be coming out here in about 2 minutes. So if you're going to trade this 18, be a little bit careful. Can we repost the levels again, please? There they are for you. We've touched our 8.5 here. But again, there's a number in about 2 minutes, so keep that in mind. All right, we're just kind of hanging here on the lows. We're going to look for, well, again, there's a number that's going to be released momentarily, so I'm flat. I'm not going to use this 18. Only if you're aggressive are you taking this level. If you're taking it at all. And the next level on the downside we have is 10 upside resistance right now. Really, not really till 33 above. So all right, the number is released here and popping up just a little, not too much. So again, the 18, it did get down to 18 and a half. So if you're concerned about that and you want to make an adjustment, you could, or if you just want to wait for the 10, you could. That's all dependent on how much risk you want to take and how each individual's trader risk tolerance. So you I probably would just hold off here and see what happens. Seems like it's a little bit heavy, just wants to take a little bit some profits, but who knows? Next level of downside we have is down at 10 support. Now we got down to 6.5 area and bouncing back up. Maybe if you got in there at the lower end, you took a little bit of a nice little scalp there. Again, we scale into a position, so consequently we scale around a level, top end, bottom end, if we're going down. So the bottom end of the 18 was maybe down at 17, given the number was released. And if you were a little aggressive and dipped your toe down there, you got paid off. Again, everybody's got different risk tolerance. It's not like people just want to say, "Oh, did you take that trade?" I mean, everybody does their own thing, and we're trying to just explain the risk to everybody here, and then you make that determination on your own. And the more you see things work out, the more you see things trade and how it works, then you get more confident in finding the opportunities that fit your risk tolerance. And if anybody has any questions, please feel free to jot them down in the chat box area. The markets are, is coming off of a holiday weekend and relatively slow. It continues to rally here. I mean, we're not rallying right now, but the market overall. All right, a little bit heavy right now. Support level on the downside we have next is down at 10. So just be a little bit patient. Our green band coming in there at 09 also. So a couple areas of support down there. Again, what we like to do is give you reasons to trade and layer in the reasons so that if you have multiple reasons to trade around an area, it gives you a little bit more confidence. And confidence is the most important thing here in trading, not to be scared, to understand what your risk is and then to trade it accordingly. And as long as we understand what our risks are, you can always adjust your trading towards to the risk. How many contracts you trade, where your entry point is, where your exit strategy is. All those things are taken into consideration when you make a determination whether you want to enter a trade or not. Again, if anybody has any questions, feel free to put them in the chat box area. As the market continues to downtick here, support down at the 10 area. All right, let's see here what we got. 10 as support, so be a little bit patient down until we get down there. Resistance right now would be around the 21 area. Let's see, the latest OPEC gathering takes place via video conference today at the pandemic, as the pandemic travel continues to prevent the usual meeting spot in Vienna. The group is now holding monthly meetings, giving it more immediate power to make decisions on the current oil market conditions, as well as room to maneuver. It also is signaled that OPEC producers are worried about how things might play out in the months as they try to balance expectations of a recovery in demand against a possible supply increase from Iran, the world's fourth largest crude producer. We do have another number coming out here at in about 6 minutes. So keep that in mind. You can tell here we don't like to trade around a number for obvious reasons. And so as long as we understand that there's a number, then we can be a little bit patient and wait. But some traders love trading numbers. I just don't happen to like them, but it's up to you. Again, welcome to some of the new folks that are here. We are trading mini S&Ps. We are scalping the market 2 to 3 points with our stops at the same level. We do this on an everyday basis here, and we give out our levels. If you look at the chat box area, you'll find the levels that are going to be There they are for you. If you bring up the chat, you'll see that they're right there for you. And you can use those as a guide for the day. You can see our first support level there at 19 due to the fact of it was on a number. We kind of had to discount it and not use it, or maybe you got in after the number at a lower entry point. Again, depending on how you adjust your trades for numbers. And like I keep saying, everybody's got a little bit different. Everybody trades a little bit differently. So I have to take that into consideration. Not everybody's going to take those levels. Some need more reasons to trade an opportunity, and that's fine. What we try to do is give you these setups, and then you have to make those determinations whether those setups are fit your risk tolerance. OPEC decided in April to return to 2 million barrels per day to the market from May to July, anticipating a rise in global demand despite the surging COVID cases in India. Since the announcement, crude has risen from $60 to $70 a level and are up more than 30% in 21 alone. Oil has still been trading at a tight range between 60 and 70 for the past 3 months as talks continue of the future of JCPOA. A deal revival would lead to a higher Iranian output. I don't know, whatever that deal is. Crude futures climbed another 3% overnight to $68 ahead of the OPEC meeting. As the market hears a little bit of pressure, we do have a number. It's going to be released here in about 3 minutes. Again, we seem to be coming up here on our 10 level. So keep that in mind if you're trading. We got a number in about 10 minutes. 3 minutes, sorry. Russia is expected to seek to accelerate the pace of ramped up in output, but Saudis may call for keeping the conservative increase given the high COVID case counts in India and Japan, as well as the looming return of Iranian exports in the back half of the year. The group is unlikely to decide on output policy beyond July, since the outlook for Iran is not yet clear, and OPEC is another meeting planned for June 24th. So obviously the oil with gas prices kind of going up is kind of maybe front and center of discussions, and maybe could affect our trade somewhat. But it seems like every time crude prices go up, the market goes up. Right? As goofy as that sounds, everybody's complaining about gas prices going up, but the market goes up. Totally don't understand that logic, but then again, I'm not here to understand logic. I'm just here to trade. All right, we got a number coming out here in about 2 minutes, so keep that in mind. Never know what the market, these levels or these numbers are going to do or not do. While it will take time to boost America's renewable power grid, which should lead to higher oil prices in the interim, some say the United States may have the last laugh. If fossil fuel-dependent economies fail to shift away from oil and gas in the future, they could be susceptible to economic instability and stagnation in the decades to come. However, many wealthy countries still outsourced a large chunk of their carbon pollution overseas for quite some time, and could continue in the future world where price differential play out in energy mix. Okay, that's very heavy for a Tuesday morning after a holiday. Inflation remains in focus. Traders are returning from Memorial Day with a renewed optimism as stock futures point higher following a holiday weekend. Dow futures are up, so is the NASDAQ, while the benchmark 500 is starting in June after notching up its fourth consecutive monthly gain. The inflation debate continues to remain in the headline. As we have this number now coming out here momentarily, So let's see what this number wants to do. And in case you are wondering if there's a number or not, and you don't know there's a number, if you look at the ladder ticket, it's kind of thinned out there. There's kind of less than 100 lots on the downside. And even on the upside, there's only a couple hundred lots. So if you ever wanted to know if there was a number that's going to be released to the market, if you look at the ladder ticket, you'll see how thinned out it is. There's like no orders in the ladder ticket. Everything's less than 100. And when you get unemployment, it's probably even less than 20 or 30. But as there we go, they kind of uptick in here a little bit. And you can see the numbers released and the orders slowly come back into the market. And the market, anyways, reacting to that number. A little bit bullish. The resistance would be around the 21, 22 area right now if you're a little aggressive. So this is June 1st, so it would mean that on Friday is going to be unemployment. And that is true. Friday is unemployment. So a whole slew of numbers. Tomorrow ADP before the market opens, and then jobless claims on Thursday, and then unemployment on Friday. So kind of considering it's a holiday. And then you got to remember, we're going to be into this, we're getting after Memorial Day, we're getting into the summer months. So things get a little bit slowed down even more than they are now. I know, right? And you have to really tone down your expectations here for summer, unless, something happens and the market is reignited with some volatility, or something happens with inflation, or who knows what. But we never know. But I'm just saying that it is, summer months are kind of slowish traditionally. So we'll see what happens. Many are still concerned about the risks of a market crash. Short interest in the spiders recently hit its highest since December, as the CBOE skew index rose to the highest level since August of 2018. Hedge funds are also slashing their holdings to 20 of the 23 commodities tracked in the Bloomberg Commodity Index by most since November, while extreme volatility is, in crypto and tech stocks has sparked worries of a broader sell-off. Now, May's non-farm payrolls report is set to be released on Friday. Is likely to be the next catalyst for the market, depending on the figure. It could support stocks or change perception of economic strength or coming stimulus measures. Following the unemployment number, investors will be watching the Fed's latest comments about inflation at the FOMC meeting scheduled in mid-June. Oh, God. That's what they're talking about. You see, you got unemployment on Friday and then nothing till, let's wait till the Fed has their meeting in mid-June. Just telling you, you can see what they're saying. You can see what's happening here. Everybody's warning you that it might be a little slow. Not the only one. All right, market went up to the 18 area and came off. Maybe if you're a little aggressive there, you took that. We had better resistance around the 21 to 22 area. President Biden unveiled his first budget before the weekend that detailed $6 trillion in spending for fiscal year 22, including 2 infrastructure proposals, an increase in military resources, as well as domestic programs like scientific research, renewable energy. In total, the plan would raise federal spending to $8.2 trillion per year by 2031, meaning annual deficits of over 1.3 to 1.8 in annual deficits. While the plan is only a blueprint for the administration's fiscal priorities, it is the subject of congressional debate. Other policy promises that weren't included in the budget may add to the weighty costs: student loan forgiveness, lowering the Medicare age to 60, creating public health care option, and reducing prescription drug prices. Phew, that's a heavy load, that's for sure. To support down at the 10 area, the bigger picture, long gone are the days of austerity conversation, the Tea Party movement, or a balanced budget talk that made some political brownie points. In fact, the United States has already returned to record debt to GDP ratio last seen after the World War II. One of the biggest fears among the stock market investors is all the spending will lead to sustained rise in inflation, which is hard to get rid of and would require the attention and possible intervention of the Fed. In economic textbooks of yesteryear, that's funny. That's very funny. I know what those economic textbooks say. Yesteryear, big deficits were set to lead to price pressures and possible overheating the economy. However, a growing number of economists and the White House feel that the current circumstances call for a different economic plan, citing historical low borrowing costs, the need to get millions of Americans back to work, and the guaranteeing that the nation remains competitive with China. The Fed has also signaled it would wouldn't raise rates until 2024. While investors are still eager to scoop up U.S. government treasury bonds, Secretary Yellen has argued that the risk of inflation and overheating can be controlled. We'll see. As we are kind of just hovering here, waiting for something to happen, we got support down at the 10 area. The market just kind of doing nothing. President's budget improves the long-term fiscal outlook because his policies are more than paid for over the long run. Acting budget director told reporters on Friday, failing to make these investments at this time with such low interest costs would be a historical missed opportunity and would leave the future generations worse off. Well, that is true. It is. I mean, they can borrow money at almost nothing. So that is true. There's no magic number or level for when a government debt begins to hurt its economy. As long as the interest rates stay low and the United States can borrow cheaply, the country can handle a much heavier debt load than once was thought possible. However, the debt cannot grow faster than the economy indefinitely. The federal debt. Once confidence erodes and treasuries of the U.S. reserve currency status is threatened, borrowing can take it more expensive, and serving the debt could cancel any budgetary forecasts that were made in the previously lending environment. Same scenario could happen if the United States would also be forced to raise interest rates as inflation heats up, or by private borrowing getting crowded out. Though we could still be a long way away from that, despite all the doom and gloom. That's kind of all interesting because they've all kind of changed their attitude about debt all of a sudden. The textbook of yesteryear, that's a great line. Instead of saying back in the day, you go, the days of yesteryear. Textbooks of yesteryear. I like that phrase. That's the ones I'm stuck on. But like I said, you have to adapt. Not only do you have to adapt with the economy and throw away those old textbooks, you have to adapt as a trader. And you have to adapt to slow trades, slow markets. Happens. Patience is important. Waiting for the opportunities to present themselves, important. And and then when they do, you have to be ready to trade, and then make sure you keep your stop in case the trade doesn't work out, because we just never know. This is futures trading. There's no guarantees. We just put out a methodology that we like to follow to keep us focused, to keep us waiting for an opportunity to present itself. And we don't get involved in the back and forth when there's nothing going on. Anything that I say here, again, we teach in our education course. So if any of this stuff interests you, or if you want to expand your trading to learn some new concepts and ideas, or if you are new to the business and want to learn how to trade, hit us up, as they say. Anyway, that's my sales pitch. It's not as good as the other one. Mandatory vaccinations. Employers can require their workers to get vaccinated against COVID-19 according to the latest update and guidance issuance by the U.S. Equal Employment Opportunity Commission. The mandatory vaccine requirement applies to all employees physically entering a workplace, with only a few exceptions permitted under law, such as medical reasons, the workforce is unionized, or if taking it against a sincerely held religious belief. Employers must also comply with the reasonable accommodation provisions of the ADA and the Title VII of the Civil Rights Act of 1964. Companies can also offer incentives to get workers vaccinated, as long as these incentives are not corrosive and move more likely to open up the floodgates of lawsuits. According to some experts, what is corrosive is unclear. Just as with anything else, one person's view of what is corrosive incentive is not the same as another person's view. The revised guidance by the Equal Employment Opportunity Commission, it was issued as the United States COVID-19 immunization drive reached a major milestone, with more than 50% of the population getting the one dose. As we slowly inch our way down here, 10 is our next support level. Meanwhile, the World Health Organization is renaming coronavirus variants after letters of the Greek alphabet instead of the place of its first discovery. The 4 types of coronavirus known by the public as the UK, South Africa, Brazil, and India variants have been assigned the Greek letters of alpha, beta, gamma, and delta. Hey. All right, we swiftly come down here to the 10 all of a sudden. We'll continue to go down. So we've been dead, and then all of a sudden we get busy. Really? It's so quick. Okay, work in this little 10 area here. I mean, dead, then boom. That's what happens with these markets. That's why you got to keep your stops in and be ready. Just never know when something's going to happen. Like I said, just keep your stop in place. That way you're no, don't get run over by all this extra volatility that came into the market all of a sudden. And like I said, we never know where they come from. That's all I can say, right? Oh, there we go. Quickly down here to the 3 area. So something happened, right? That's why you keep your stops in. All right. Well, all of a sudden we get a little bit busy, right? Out of nowhere. Now we're working this 3 area here. And that's why we tell you to put your stops in, because we just never know. Right? It's quiet, quiet. You hear me talk about whatever, and then all of a sudden, boom, business. Sometimes it could be good, sometimes it's not, and that's all right. What can we do? We just never know when there's going to be some added volatility. We're trying to keep you short there around 21 or 22, but we never get back up there. And below, let me give you some levels here below this. Well, I'll wait till see what happens here. Some of you are working this 03 area. Yeah, well, we're working this 3 area now. And that's why we get stopped out, and it gives you a chance to get back in. And even though we're not trying to bounce here, it's just trying really hard to give us a little bit of a profit. Just trying. I'll give you a chance to get in many a time, even if you didn't get in initially. And we're getting our good 2 points here. So kind of make up for a little bit here of the move off of the 09. So the 3 area working out for us. Again, you got to stay focused, and you get out and then get back in. And that way you don't get run over by one trade, and you're getting a nice return here off of this 3 area. This is, oh, wow. Very nice. Okay. Market rotating back up here a little bit. Again, that's why you keep your stops in just for this little situation, and then you get back in down to 3, and you're getting paid off on this. And hopefully you kind of broke even on the 2 trades, even though we were kind of just, when you hear me talking as much as I was talking, that's not good. And then all of a sudden we, get some energy, come down here really fast, and you got to be kind of ready for it. Let me give you some levels here. The next level we have here is the 41.97. Then below that we've got 90, 83, 74, and 64. 90, 83, 74, and 64. Like I said, I don't know where we're going every day. All we can do is have a guide for us and then go from there. So we did bounce here off of the 03. Had to deal with, obviously, the 10 level did not work out too well, as something got said, or somebody said something. Created this little volatile move here off of, we were dead for a long time there, and then all of a sudden it traded down here. All right, so there are the additional levels. If you look at the chat box area that we have underneath. So again, we don't know why the market's reacting to whatever it's reacting to, but those are the levels that we have here, and just kind of keep your stops in. We have a resistance right now would be probably around the 18 area. Yeah, we continue to downtick. Next support level is now at the 41.97 area. Whatever energy is in this market is obviously creating this little push to the downside here. Come here to our settlement price at 2.5. Some of you are trading that. So the price here, the lower end of the 3 as well, in case you were did like that trade. Yeah, very important to stay patient. And trade whatever the market gives us. And make sure you keep your stops in. That's all we can do. That's basically what they did there. They just went down there and tested our settlement price. All right, so now we have no numbers. We do have a Fed speak at 1 o'clock. That's about it going forward in case something happens later. Resistance again would be around the 18 area. Not anymore there, Robert. Maybe when it got down to the 2.5-2 area, there was another reason there. But not now. Resistance around 18. Next support level we have is down at 41.97. The rotation there off of our 3 area worked very nicely. Obviously, the 10 area did not. So hopefully you're able to get out of those 10s and get back in at the 3, because it kind of happened very fast there. Didn't give you too much time for thinking. Those are like the trades that I like the best, when I don't have to think so much. I know it's kind of weird, right? But just the market is just telling me to do this and do that, and I'm doing it. You know, sometimes you just trade because that's what the market's telling you to do. But you got your stops in, you got your orders in place, and you're just trading the ebbs and flows. Sometimes that could be a little bit fast, considering it was so slow for most of the morning, right? Unfortunately, but this is what trading's about. It happens when you never expect it to, and that's why you're always prepared. If anybody has any questions, if you put them in the chat box area, we'd be able to answer them for you. So please, if you have any comments, questions, chat box area is where we'd find them. I'd see them quicker. Well, I don't know. I don't know. Well, when I get down there. level of resistance we have is up at the 18 area. All right, again, if you did buy them down there at the 3 area, you got a nice little rotation here. Again, like I said, unfortunately, we had to, it did get down to our lower end as well. So you got a couple opportunities there to get around to get into the 3 area. And a nice rotation off of it. The 10 area that we had got kind of run over. So unfortunately, we did not do well with that trade. And now we're just kind of hanging down in here. Go right up to our green band there and came off. We are just bouncing here against our green band there and holding that line. Next level of resistance we have is up at the 18, at least for the time being. All right, we rotate again off of that 910 area. Next support level we have is down at the 4197 area. All right, we are just kind of range bound here. Kind of got a new little range area that's trading the 10 area on the upside. It got down to 4 and just kind of sidewinding here a little bit. Next level of downside support is 4197. Nice trade there, Robert. Well, I mean, you had, if you were long at 4 and you had 5 points on it, and you scratched it, that's doesn't. I mean, you got to make a little bit. You can't let the thing go by and break even on it. I'm saying 5 points is a pretty good move, and so especially when it's slow like this. Well, I can see that, but you have to also, well, if you're going to do anything, you have to make sure you guarantee yourself a profit, somewhat of a profit, to pay for at least commissions, right? Again, it's what your objectives are, right? If your objective was to get it above that 10 area for it to rally up to 18, okay, but you need to take some profits along the way. So if you had a couple contracts, that would have helped. Well, in that case, then you have to make sure you can't. I can see what your objective was, but if it interferes with the profit, then it becomes a little bit of a problem, because that was a nice trade and you should be able to take whatever the market's giving us. That resistance area that you were looking for at an 09 held. So you have to respect it if you're trading one lots. All right, we continue to downtick here. Coming down here, next level of support is down at the 97 area. Well, you got to respect the resistance area. You said you were trying to get it above 9, so you have to get out of one and then put the other one as a stop, as maybe a point profit or a break even. All right, we got down to 98.5 here. Kind of a little annoying. We have 97 as support. But you understand what I mean by you have to respect the resistance area? It's a resistance area for a reason. But you're right. You can also get into a breakthrough above that if you take profits, and then if it does happen, then you can always get back in again. But you have to respect the resistance area. All right, we drifted down to 98.5 here, and then come off here a little bit. Be a little bit careful there if we don't get it in this bar. All right, we've come down here. We got a new bar, so maybe enter in at the lower end of the range there, depending on how much risk you are willing to take. All right, if you are in here at the top end of the range, you can fill here, see what it wants to do. If you're going to adjust, that's fine too. Nothing wrong with either case scenario. And the market getting a little bit nervous over here. Again, support level down there at the 97 area. Again, just keep your stop in. If you adjust it a little bit there, then can make another adjustment if we don't get filled in this bar. All right, levels are there, but we can adjust them, add to them, subtract from them, tweak them a little bit depending on the price action. All right, now the resistance will be around the 3 area, 2 to 3. That's better. Now we come up to a little bit of resistance here against the 2-3 area. I agree with you there, Don. All right, market is kind of bounced off of the 97 area. Again, we were making adjustments along the way. Some of you maybe kept it, some of you didn't. But if you did, you did well. Again, we are trading mini S&Ps there, and we use our levels there, and we can suggest that we can add to them, subtract from them, and anything that makes you, keeps you in the trade. That's what we're trying to do. We did get right up to our resistance area there too, and bounced off here a little bit. If you are trading and being a little aggressive, maybe you sold that area up there. Taking a little bit of a rotation here against that 2 to 3 area. And these are price action opportunities that occur, and in addition to the levels that we have. All right, we rotate back down here a little bit. Again, the 97, because we clicked down to 7.5, kind of worked, even though you might have maybe made the adjustment there or not. But again, Robert, we did talk about the resistance area there at 2 to 3, right? And so again, your expectation there you're trying to fight the market, and then you keep losing that potential profit that you have. well, we've gotten a little bit of a range here. We get above 05, we kind of, you don't want to be short anymore. And the next downside support we have is down at 90. Resistance right now would be up around the 12-10 area, 10 to 12 area. Well, 10, 8 to 10 area, I should say, and then out above 12. Again, you got to be patient and wait for the opportunities, right? We talked about some resistance between 2 to 4 or 2 to 3 that traded off. Earlier, we had resistance around 8 to 10 that traded off. Yeah. We came down here to our support level. If you made the adjustment because of the price action, that's fine. Then we'll wait for the 90 below that. Right now, anything above 05, out of any shorts, definitely above 12. If you get above 12, we could rotate back up to our pivot there. All right, I'll get back here in a bit.
A couple quick programming notes. If you haven't signed up for Sol's access to the service, raise your hand. I'll send you out the information in chat. The link that I'm sending out has a discount associated with it. This is the only link that works for that discount. So raise your hand up. I'll send it out to you. Hey, thanks, Tom. Hey, Pete, appreciate it. Hey, DR, you have any questions about Sol's services? David D. Hey, David, did you sign up for Sol's monthly? Just let me know back in chat. Laura H. Mark B. M.E. Tim S. Tess. Let me know if you signed up for Sol's monthly. Use the chat feature to respond. Thank you. Hey, Mike E. I would, it just depends if he's running it then. Did you want to check out the Wi-Fi and just see how it's working? And Tim asks, what's your best telephone number? I'll give you a ring up. Yeah, that might be your better choice, but just check it out. Hey, Timus, just let me know when you're done, and then I'll give you a ring up. Hey, Mikey, no problem. Hey, DR, you back? Let me know in chat. DR. Laura H. Let me know if you're back, Laura H. ME. Let me know if you're back, ME. And TSE. Just give me a quick high sign that you're there. Hey, Berger. Anupam. Hey, Carlo, I saw you sneak in there. Hey, quick shout out to Robert C. Hey, Robert, thanks for becoming friends and family. Appreciate it. Hey, Laura H, you back? Laura H. Mark B, let me know if you're back. Mark B. M.E, let me know if you're back. M.E. D.R, let me know if you're back. D.R, use the chat feature to respond. Thank you. Hey, thank you. Hey, Robert, you're the best. Hey, Tim, no worries. And just so you know, Hey, quick shout out to Laura H. Hey, Laura H, you back? Let me know in chat. Mark B, let me know if you're back. M.E, let me know if you're back. Use the chat feature to respond. Thank you. Hey, Mark B. So usually it's $379 a month. Right now it's on for $100 a month. So you receive a discount of $279.